Did you know that banks and lenders actually put black marks on certain postcodes and won't lend to people in those postcodes, regardless of how financially viable you might be as an individual? Have a listen to this video and you'll hear some other things that you need to consider and how to present your case to a potential lender or bank in terms of getting finance for your project. This video is part of our Rebuild and Build Better series, so be sure to subscribe and like the video and check out the comments in the description below for more information. Hello, I'm Amelia Lee from Undercover Architect, and I help and teach homeowners how to get it right when designing, building and renovating their family homes. In this video, I speak with Amy Beattie from Good Green Home Loans. Now, Good Green Home Loans are not your average mortgage broker. They actually help you find a home loan from an environmentally responsible lender who doesn't use their profit or power to support the fossil fuel industry.
In terms of, what we were talking about earlier, some people may have bought land that now isn't necessarily of the value that they might have paid for it. It might not have climbed in its value as much as they expected. It's had the bushfire overlay. They, even I know some people who've owned land since pre-2009 when all of the rules were different.
Mm-hmm.
And they may now want to build a property on it and are now having to sort of navigate these different hoops and these different requirements than when they bought the land. What suggestions do you have for them in terms of thinking about finance and ascertaining if there's going to be a gap, I suppose, that, and just avoiding that surprise of, am I going to need extra cash to come up with? Obviously, the research is one thing. Is there, how do you suggest people sort of do that research of establishing value? Do you have specific recommendations for people in terms of how they kind of establish the value of their project?
Yeah. Many banks will allow you to just order an upfront valuation without going down the finance side of the assessment side of things at all, and they might pass that valuation cost on to you if you don't proceed with something, but sometimes they don't, and so you'd basically be wanting to go to your broker or direct to your bank and asking if they are able to do an upfront valuation for you, so you know exactly where you stand from a value point of view before you embark on your project ultimately. So yeah, that's the short answer to that one.
And have you seen that scenario where people have, they've held land for some time, they thought it was worth X, it's not, and sort of that, I suppose, that balance and juggle of the project planning and how to obtain the finance that they ideally need to make that project happen?
Not really, because it's, when it comes to property prices, they haven't really had many bumps, in my lifetime. So, land values have been maintained for the most part historically. So these little kind of blips in values have just happened so infrequently. It's a really unknown space, I guess, and even more so now in the current climate. So it's one of those things, I guess. If you're planning to do something with your land, you really need to be going and speaking to the expert sooner rather than later and getting valuations done, because who knows what's going to happen with property prices at the moment. So finding out the number and getting those upfront answers to your questions early is the best advice I can give. But no, I haven't seen that. I've seen the odd, off the plan purchase that's come in lower than was expected when, the valuation was done 3 years before the project finished. But it's a completely different kettle of fish. So no, not in relation to land. I haven't specifically had to help somebody in that situation. But I reckon it's going to be more common.
Yes, and I suppose the only scenario that I've really seen it in is where a developer may have had a large subdivision, they've sold off early blocks to individual purchasers, but then a builder may have come in and bought a section of 15 sites or something like that to do
Mm.
a bunch of home and land packages,
Yeah.
and have been given a lower price per block of land as part
Mhm.
of that deal, which has then
Ah.
impacted the value of other sites in that
Yeah.
development.
Yeah. Right.
And so when it's come to the point of financing, that's then meant that there's been a cash gap for the individual purchaser, expecting that they would have better equity in the land to then be able to refinance and build the property on. So and I think too, the bushfire overlay, it's interesting to say, I have not, I'm trying to think if I've seen any scenarios where it's diminished the value of a property, but oftentimes those sites that do have bushfire overlays, they're oftentimes in areas that have either great natural resources that improve the value of the property, or they're in areas where they're the views or things like that, may be incredible, or there's other aspects that kind of prop up the value of the property, and the bushfire overlay is just a constraint to deal with construction, but not
Mm.
necessarily a constraint to deal with in terms of the valuation assessment. So
Yeah. Yeah.
it's quite interesting to see, but I think it is that thing of, unless you're constantly staying across what are the constraints and zonings on your property, it can be a nasty surprise when you go to the pointy end of kind of working through that project plan and finding out, hang on, this wasn't here 5 years ago. If you have been holding onto some land for some time, I've known people that have had land for a decade that they bought for, peanuts or something like that. And
Yeah.
it's in some beautiful kind of remote location, and it's always been the plan to build a holiday shack on it or something.
Yeah.
And the area is full of holiday shacks, and unfortunately now none of them meet code. And so it's
Yeah.
it's a very tricky scenario. So
Yeah. But again, to that, like the banks all have different rules around those things. Some banks will wipe out an area just based on postcode, and there isn't even a necessarily, or maybe they won't provide you the reason why that postcode's wiped out, but it might be that it's a mining area and it's propped up by that industry, which is, potentially not going to be a strong thing, something that's positive anymore. So speaking to a broker who knows, with the breadth of banks that they've got access to, that a particular bank doesn't bias based on postcode, or doesn't bias based on a particular overlay, and will look at each transaction on its own merits, means that with all of the banks that we've got to choose from, there's very likely to be one that can help you.
So does that happen? Does it, banks have got particular postcodes that they just won't offer mortgages in, or particular council kind of conditions that they won't offer? Where do you see that sort of, like you mentioned, the mining? Is there
Yep.
other sort of scenarios that you see that happening in?
Well, in places like the Docklands in Melbourne, where there was, the supply and demand factor, and then also quality of builds, and that type of thing, meant that property prices there changed drastically, I guess, from the point of purchase for lots of people to not far down the track. So yeah, absolutely. And all banks generally have, most banks generally have a tool where you can go in and plug a postcode, and it will spit out a yes, we can talk to you, or no, we can't. And you don't necessarily understand the factors behind it. And honestly, even with the mining factor, one bank will say no and 5 banks will say yes. And it's just about the risk appetite of the bank, and, whether they're balancing their overall assets and what type of assets they want. I'm not talking about the property assets there, I'm talking about you as a client. If they're trying to boost their lending book, they might open their postcode ranges just simply because they want some strong borrowings overall, and the postcode is one factor. But if they're borrowers with strong financial positions, the postcode doesn't matter. So there's, like you said at the start, it's a cocktail of factors, and it's dynamic. It changes daily. My inbox is just often emails from banks saying we've changed this policy, or we've changed that policy, or and there's so much to keep abreast of. And even sometimes I won't know what bank I can find that can help you until you come to me and present your circumstance, and then I have to start doing the research for you. So because it just changes so often.
That's fascinating. I picture like this kind of back end kind of room of spreadsheets with all of this data in it of yes and no's against it, and wish that it was transparently available to everybody to access, because it actually it would be, it's quite fascinating that it's not just about the risk profile of that particular area, but what the bank's agenda might be in terms of its larger portfolio and its reporting to shareholders and its, balance sheets, and what it might, even from a marketing position or a brand positioning, want to be seen to be doing compared to another bank. Like that, that's incredible. It's weird to think of all those permutations are going to impact you when you come with your individual house on an individual lot and say, hey, I need some money.
Yeah.
And it's like it's got to fit into this kind of data stream of yeses and nos in one bank's particular profile and portfolio. That's just incredible.
Yeah, absolutely. And it's and there are spreadsheets that exist like that. And when you first approached me about taking part in the podcast, I the first thing I did was go to some of those spreadsheets and type in bushfire, and the word doesn't come up in the spreadsheets. So straight away that was saying to me it's not a factor specifically that the banks assess risk on. You need to dig further, and the further you dig, it all just comes back to that person's individual circumstances and all of the different risk factors, and hopefully how many fall into the low risk category versus the high risk.
Yeah, it's funny because you could get quite despondent about that and think, well, I'm never going to be able to know all of those puzzle pieces. And then on the flip side, you can get quite made quite buoyant by it to go, okay, well, what I've got to do is just get what I can control in order and what I can impact sorted in terms of my deposit, my knowledge, my understanding.
Mm-hmm.
I had a friend when I was at university who was a complete real estate junkie, and by the time we'd all finished uni, he'd already invested into 1-bedroom properties whilst we were all spending our money on eating out. But I'll never forget him saying to me, never send a valuer in blind, Amelia. Always be, fully informed about what you want that valuation to be, and give them the homework you've done to set them up to understand what you're seeking to achieve. And so every time we've had a property valued, I've done a lot of that research and real estate background information, and you go to your agent and get them to look at RP data for you, and all that kind of stuff. And it's quite interesting because it's such a significant asset, and and a renovation or a build is such a significant spend. But so many don't know those pieces of research to do, or feel like they're going to just have to pay for that extra information. But so much of this you can access through conversations with talented professionals who have your best interests at heart. Someone like you who can just then lay out to them, okay, these are the risks. Can you see what you look like? I mean, at the end of the day, you're a number to a bank, and this is what your number looks like.
Yeah.
What do we need to do to make your number look better and to look less risky as an option for the bank? So
exactly. And sadly, with people directly affected by the bushfires, they're not in a situation where they're dreaming about something they want in 2 or 3 years. It's something they need help with now. So it's not quite that simple on that side of things, but absolutely, that's exactly right. There's so much in your control to drive the outcome. It's just going to be a bit of time and effort, and it doesn't have to be cost.
I do hope that you found that video helpful. Be sure to check out the other parts of my conversation with Amy Beattie from Good Green Home Loans. It's really useful information if you're looking for finance for your new build or renovation, particularly if you're doing that in an area that's bushfire prone or on a property that has a bushfire overlay. And be sure to go ahead and comment and let us know what you thought about this video. As always, thank you for tuning in and for letting me be your secret ally. Until next time, bye.